High-yield monthly dividend stock investing has the power to transform your financial future, from being in debt to making you a millionaire in less than 10 years. With the extensive research I conducted, I will show you why it's the ultimate passive income strategy, how it can make you wealthy, and why it's the #1 and only true way for hands-off passive income. What is high-yield dividend investing? Before we delve into the amazing benefits of high-yield dividend investing, please like, subscribe and hit the bell button if you haven't already. It helps me get more informational finance videos out to you. Also, please check the links in the description below for anything we discussed in this video. Now, let's clarify what high-yield dividend investing actually means. High-yield dividend investing refers to investing in companies that consistently distribute a significant portion of their earnings to shareholders in the form of dividends, such as with exchange-traded funds and real estate investment trusts, or even return of capital such as with closed-end funds. These dividends are often paid out monthly or quarterly and can provide a steady stream of income for investors. The power of passive income. Now, why is passive income so incredible? Well, passive income is money that flows into your bank account without requiring active effort or time investment. I personally love it. It's the ultimate goal for many seeking financial independence without running a business. Unlike traditional employment, passive income allows you to generate wealth while having the freedom to pursue other passions and interests. Here are a few reasons why passive income is a game changer in achieving financial freedom. Time freedom. Passive income gives you the gift of time. By generating income passively, you're not bound by the constraints of a 9-to-5 job or the need to actively look for work for each dollar you earn. This newfound time freedom allows you to pursue your passions, spend more quality time with loved ones, travel, or engage in activities that bring you joy and fulfillment. Scalability. Passive income has the potential for scalability. Unlike traditional employment, where your income is often limited by the number of hours you can work, passive income streams can grow exponentially without a linear relationship to your time input. Once you set up a passive income source, it can continue to generate income for you, regardless of the number of hours you personally invest. Multiple streams of income. Passive income encourages diversification. Instead of relying solely on a single income source, such as a job, passive income allows you to create multiple streams of income from various sources. This diversification spreads your risk and provides a more stable financial foundation. If one income stream falters, you have others to rely on, reducing the impact on your overall financial well-being. Wealth accumulation. Passive income is a powerful tool for wealth accumulation. As you build multiple streams of passive income, you're not only creating a sustainable financial future, but you're also accumulating assets that can appreciate in value over time. This can lead to long-term wealth creation and the potential for financial independence. Financial security. Passive income provides a layer of financial security. By having income streams that don't rely solely on your active efforts, you're better prepared to weather unexpected financial challenges. Passive income can act as a safety net, providing a consistent cash flow even during periods of job loss, economic downturns, or unforeseen circumstances. It's important to note that while passive income doesn't require active effort or time investment, it doesn't mean it's entirely hands-off. Initially, setting up passive income streams may require some upfront effort, research, and planning. However, once the systems are in place, they can operate autonomously with minimal ongoing involvement. And it's like little money fairies dropping money into your brokerage account every month. Why high-yield monthly dividend stock investing? So, why should you consider high-yield dividend investing as your go-to strategy for passive monthly income? Let me give you 3 compelling reasons. Consistent income stream. High-yield monthly dividend stocks offer a consistent income stream at a higher rate than lower-yield dividend stocks. And it can be far more stable than other investment avenues. By investing in well-established companies with a history of dividend payments, you can rely on regular payouts to cover your expenses or reinvest for greater wealth creation. Potential for capital appreciation. It's not just about the dividends. High-yield dividend stocks often come from companies with solid growth potential, for instance with growth-focused high-yield ETFs like SDIV or JEPI. As these companies increase their profits, the stock price tends to rise, leading to capital appreciation that can be reflected in the ETF appreciating too. This means you can benefit from both regular dividends and the potential for your investments to grow in value over time. Passive and low maintenance. Once you've chosen a portfolio of high-yield monthly dividend stocks, the level of maintenance required is relatively low. Unlike other investments that demand constant monitoring and active decision-making, dividend stocks provide a more hands-off approach, allowing you to enjoy your passive income without constant daily attention. Potential higher income trade-off. If you're looking for high quarterly and monthly income in exchange for capital appreciation, then closed-end funds and real estate investment trust may be for you. These types of investments can yield very high with double-digit yields. For instance, a well-known closed-end fund, CLM, has a dividend yield of over 18% and declares a monthly dividend of about 12 cents for each share for an annual dividend of $1.47. Contrast it with Apple, and its dividend yield is under 0.60% and has a quarterly dividend of 24 cents for an annual dividend of 96 cents. You may be thinking, well, with the annual dividend, it's not that much of a difference in payout. But, with the amount of shares you can buy, you can quickly see the difference. Apple is currently about $172 a share. CLM is currently about $7.71 a share. For $172 for one share of Apple is about 22 shares of CLM, which means you would get about $2.64 per month or about $31.68 per year for 22 shares of CLM versus only $1.47 per year with one share of Apple. The downside can be capital depreciation, as you see with the chart of CLM. This is purely an income closed-end fund and isn't for the faint of heart. You are trading income for capital appreciation with this one. There are other types of income stocks with different strategies, such as with QYLD, JEPI and more. Let me know in the comments below if you would like me to make videos about different high dividend investment funds. Building wealth through high yield dividend investing. Now, let's talk about the potential wealth building capabilities of high yield dividend investing. By reinvesting your dividends and harnessing the power of compounding, you can accelerate your journey to financial independence. A high-yield monthly dividend ETF, such as QYLD with about 11% yield, can give you hundreds or even thousands of dollars in dividends each month. Compound interest magic. When you reinvest your dividends back into purchasing more shares of the dividend-paying stock, you unlock the power of compound interest. Over time, this compounding effect can lead to exponential growth, significantly multiplying your initial investment. Diversification. High-yield dividend investing also allows you to diversify your investment portfolio. By selecting dividend stocks across different sectors, you spread your risk and minimize the impact of market fluctuations. This approach provides a more stable foundation for wealth creation. Long-term wealth generation. High-yield dividend investing is a long-term strategy that enables you to build substantial wealth over time, but possibly faster than lower-yield dividend stocks. As your portfolio grows and your investments compound, the passive income generated by your dividend stocks can potentially surpass your expenses, leading to true financial freedom quicker than the traditional model. Why high-yield dividend investing is the best passive income strategy. There are several reasons why high-yield dividend investing stands out as the best passive income strategy. Stability and reliability. Unlike other passive income sources such as rental properties or online businesses, high-yield dividend investing offers a high level of stability and reliability. Dividend-paying companies are often well established, with a long history of consistent earnings and dividend payments. This reliability makes it easier to forecast and plan your income stream, providing peace of mind. And if a fund stops or lowers their dividend, you can sell it and invest in another one. Lower risk. High-yield dividend stocks are typically less volatile compared to growth stocks or speculative investments. Dividend-paying companies are often well established and financially sound, reducing the risk of significant capital loss. By investing in fundamentally strong companies, you mitigate the risk of losing your initial investment while still earning passive income. Inflation hedge. Dividend payments have the potential to keep up with or even outpace inflation over the long term. As companies increase the dividend payments over time, your income stream can grow, maintaining your purchasing power and protecting your wealth from the erosive effects of inflation. Tax advantages. In many jurisdictions, dividend income is subject to favorable tax treatment. Dividends are often taxed at a lower rate compared to other forms of income, such as salary or interest income, and return of capital may not be taxed at all. This can result in higher after-tax returns, boosting the overall profitability of your passive income strategy. Flexibility and freedom. High-yield dividend investing provides you with the flexibility to choose how to utilize your passive income. Whether you reinvest your dividends for compounding growth, use them to cover your expenses, or pursue your passions and dreams, the choice is yours. This flexibility allows you to customize your financial journey and create the lifestyle you desire. High-yield dividend investing is indeed the ultimate path to wealth and true passive income. With its consistent income stream, potential for capital appreciation, low maintenance requirements, and wealth-building capabilities, it offers an unbeatable combination of financial benefits. The stability, reliability, and tax advantages associated with high-yield dividend stocks make them an attractive choice for those seeking to generate passive income and achieve financial independence. Remember, building wealth through high-yield dividend investing requires thorough research, diversification, and a long-term perspective. Consistently investing in high-yield monthly dividend stocks every week or month will allow you to see your portfolio grow, and compound interest can grow your portfolio quickly. Suplex the like button if you enjoyed this video. And why don't you check out this video next?